Good morning, everyone. Good morning. Good morning. Can you guys hear me now? Damn, this headset just auto mutes itself. Sorry, guys. Can you hear me now? Good stuff. Apologies for that. So, we have our overnight inventory on this last trading day of April. And it's long. So it's probably around 95% long, maybe even more. If we open here, we are going to open on another gap. So, main question is, do we open on a gap? Does that gap fill? That's what we're looking for. 97%. Thanks, Elsie. It's good having you back. Oh, yeah, the end period price probe. Now, what he's talking about is. Where the heck is. Oh, yeah, here it is. The last hour of trading. When the market took out the existing day high. Got a massive short position under there. The weird thing, though, is That price probe didn't hold. It came down and we closed it all the way down here. It's kind of a typical earnings mishmash. You know, yeah, overnight big dip, and they bought the hell out of the dip. You know, we went through this in the Globex. If you guys, I think I'm getting a little better. My brain was actually working in Globex. So I was showing people all the short positions in the market and how those short positions have kind of led to where we are now. So let's just go take a quick look. What I did was I hit all the drawings just so you guys could get a sense of. Was there big volume? I don't know. I'll check in a little bit. The problem with these markets is that the way they're built. In the old days, we'd have much more back and forth trading. And those were the old days before money managers had trillions of dollars and locked up stock positions for 3 decades. So you'll go and look at companies like Apple and Microsoft, all these large companies. They don't actually trade much of the stock that's out there. So say if you have 15 billion shares in Apple, it trades less than 100 million shares a day. So what I was saying is this 7120 area. Every time we come down there, it looks below and fails, and it's always bid. And then we were watching 7150, the same thing. We have a hard time staying under 7150, 7120. We are in a distribution. So if you were like a larger trader, you would go and draw like a balance zone here, right? And then you would double it to get the targets up and down. So if you were to do that, you'll see that where there's still a gap here that's not filled, and we one time framed, and now we're completely in distribution again. So the problem with this whole thing is that there's a gap here, and then we have this huge gap here. So going into this end of the month, starting next week, the problem is, and I said this in Globex, I said if we hold this balance, right? Yeah, when you guys in your 45-degree angle, oh my God. If we hold this balance, if we don't get any liquidation, what happens when you go sideways for quite a while? Right? When you go sideways, you can think of this. You can think of this as the hot nightclub. And everybody comes and starts standing in line. And the more people stand in line, it attracts more people to come and stand in line to get into the club. Right? So that's exactly it, Nathan. Number one is you attract buyers because you have price stability. Number two is if you get enough people short in this cost basis and the wholesalers start to lift price, you got two sets of buyers instead of one, right? And that pushes price higher. We've seen it happen multiple times. I mean, it happened here. Price stability dip, more price stability, boom, right? Now, a lot of this stuff you can say is news related, and that's true, right? But we are above the cost basis of the entire year of the entire S&P, right? So the more people short in this area, the more likely we're going to have a move higher. So just something to remember for those traders who trade larger time frames. You know, and that's the problem. A lot of people will be like, "Oh, it's got to go down. It's way too high. I got to short. I got to short. I got to short." Right? You know, let's see here. We're open. Hang on. Stay with me. Sorry, guys. Somebody, I got carried away. So off we are. Inventory is long. So gap fill. Good, right? Now let's see. Do we accept underneath yesterday's range? So if you're shorting, if you missed this, I'm sorry, I was on the wrong screen. Say you're shorting underneath yesterday's high. Well, your stop's right above it, right? And why would you be shorting? Because inventory is long, so you're looking for a move down, right? Shorting is a tough business these days, right? Hit and run shorting, okay, right? Quick in and out trades, like say you're short 88, 89, 87. Go put some bids in, right? I shorted 87, just on a couple of micros. I'm bidding the 85s to see if I can cover. And I'm flat. Woo, that moved good. Thank God I got that quick. Woo. I had to go grab the offer in the last couple of contracts, right? That's what I'm talking about. That hit and run short is you can do it. You know, you can hit it short, but don't get married to the short, especially at all-time highs, right? There's a quick gap fill. Now let's see if we can get back up to 92. Globex volume, yeah, it was pretty decent volume, 320,000 contracts. So let's see now. Where's our next move? It's actually the first trade I've taken all day. A little bit of size here. Now let's see if there's a seller at that 91, 92 area. The hardest thing in a market like this is consistency. It's really hard being consistent. No, inventory was long. I took a short from 87 down to 85. Then I covered. I'm flat right now. I'm not long or short. I should have shorted it when it came back up to 88. But my damn throat's sore again and I was drinking water, so I missed it. Let's see if we can come down to that 71.80 where VWAP is sitting. It's a little bit of position there. We're going to drop in. The front running VWAP a little bit, but I'm expecting it to tag. Being consistent is really, there's the tag of VWAP. There'll be a little bit of a response. No, there isn't. They sold into it. So once again, those of you who did the look above and fail of 71.92, that's great. If we stay underneath 80, you're looking for 75, and you can use the larger stops on the half-hour bars here on the right. Here we go. Here's 75. Boom, there it is. Now this is a natural correction to overnight inventory. So user overnight inventory was 97% long. That's why I was talking about shorting off the open. There's down to 75, a few bids there. Let's see if we crack that. Watch it. It's going to come back up to VWAP now. And as it comes up to VWAP, there should be a seller there. If there is no seller, the shorts will come in hard, do some covering, and we will get back up. So go and mark the sellers. Nice and simple. You know where the sellers are going to be. See, there's the seller at VWAP. Say if you're long here, you know that you're looking for a seller at 84. So, you know, if you had bought VWAP or if you had bought 79.80, you want to get out before 84 because you know there's going to be seller up there, right? Back down again. Yeah. Filled the end probe in RTH, right, Elsie? I mean, it got filled yesterday after the close, but RTH is a different can of worms. Okay. Next up on the subway is 71.71 if we can stay under 75. A little bit of short covering here. Coming in for some size. Sellers have now moved down. Just there at 76. It's having a hard time getting under 74. Let's see. Here we go. So you can see the seller move from here to here to here. Now down to here. There we go. Here comes 71. Subway's coming to the next stop. Boom, there's 71. Thank you. All right, now Final target will be 71.66. Yeah, exactly. Especially on like a day with four sets of earnings. The theory behind these zones is a cost basis thing. So if a market comes into this zone and keeps going, it'll go from 71.92 all the way down to 66. Don't try to look below and fail yet. Okay? Let's see if it bids. Oh yeah, it bid, right? Came down close to 66. Didn't quite tag it. A little bit of short covering coming in. Give this next candle the opportunity. If you're looking for a long, right, you're going to be getting the best deal at the edge, right? So if you're buying 68, 69, you know there's going to be a seller up here at 71, right? So make sure you have your orders out. Like I'm long 69 and a half, and I'm out at 71 and 3/4. That's okay. Just on two little ones, right? Just to test and see if that bid is there. Yeah, I used 46 to 53, but that was like way before everybody was up. There you go, TBD nice, right? And that's how you play the long. Now, it's not a great long. I mean, if the course short was a huge short, but if you want to take a long, now wait to see if there's price stability here. Give it some time. The scalp worked. Bigger position? Yeah, let's see, right? Month end, which was yesterday, and the last trading day of the month, which is today, both of those kind of situations I tend to de-risk, right? So if this holds in your long, you're going to be wanting to take profits around 75 because there's going to be a seller right here at 76, 77, right? When I see a big green candle, I want to see where the sellers step in. Now I know that there's a seller here at 74, 73 and 3/4. Watch. They're seeing some bids. It's a good inventory correction. All our trades are based on inventory corrections. Every trade that you guys take, even though you don't know it, is based on the correction of inventory. Either inventory gets too long or it gets too short. Right? When we run out of supply, it gets too short, price goes up. There you go. Next stop, VWAP or 79. And that's why it's nice having these zones, right? You draw out the zones every morning. You do the same thing. That way you develop discipline. Someone was asking me this morning, do you know traders who consistently get payouts? And I'm like, yes. And he goes, how? It's discipline. Getting paid in this business as a retail trader is all about discipline. Getting paid in the business as an institutional trader is about speed, relationships, and salesmanship. Completely different things. Next stop on the upward, if we can stay above 80, you're looking for around 83. Guys, I'm going to try and do another class. The throat is sore again. I apologize. I was going to do it today. I might have to postpone it till tomorrow. And if not, we'll do it on Monday. Uh, I'm still sniffling like crazy. Here comes 83. Ah, there's the seller at 83. You see, right there, where they sold, they will sell again. If we clear this, then we'll rotate back up to the 92s. But just give it some time. If you take a look at the bird's eye chart here, check this out. So our market profile is really handy. Look at this, guys. Here's the cost basis of yesterday. There's the distribution overnight. And look exactly where the low is. Right there. So we're still in distribution. We put it on sale right back to the top of cost basis. And now we're trying to get them to buy it higher again. See? Once you understand the concepts of inventory and cost basis, where it's priced, your whole life is going to become so much easier. Oh, you're still going to have a hell of a time trading in this market. Execution is a pain in the ass, right? And adapting to change is really difficult, right? It's not easy, right? Adapting to change is not easy. But over time and with practice, you'll get better at it. At first, just aim to learn, and then try and aim for consistency. Okay, that's really the most important things. Once you get consistent, you can start sizing up. But if you size up and you're not consistent, the results are just horrible. Okay, what's next here? Little chop back and forth. When the ranges are this big, I really like trading at an edge, right? Just because you have better odds when you trade from an edge. Hmm. Okay, chop. What's going on? You guys still awake? Just waiting for the next trade? Just checking. I got to check every time you guys go quiet. I got to make sure that I haven't lost you. Good, good. I hate trading from the middle. Okay. More chop. Sorry, I'm being quiet here. Just trying to save the old vocal cords. I don't see a trade right now. We're smack dab in the middle of this purple zone. Practicing the relaxing part. That's good, Dave. Relaxing's good, my friend. Looking for another test of 66. That's what I'm kind of, you know. We still haven't corrected overnight inventory all the way down to 41. The other thing I'd really like to see, I'd love to see another test of 71.50. Good stuff, TBD. Good discipline, man. Good discipline. You know, the discipline part is something, it took me a long time to work on that. And doing the same thing every day really helps. You know, well done. Good self-control. Go enjoy the day. And don't spend all that $500 on some fancy stereo. When overnight inventory is long, a correction happens because the market gets too long. You see, and we sell people all this product way up here, and they're looking for like 72.20, 72.30, right? And when they don't see it, they start puking. So when they start puking, the people who own it cheaper sell ahead. So David, it's like a used car dealership, right? Except at this used car dealership, say I sold you a cart for 10 grand, and you're looking to go flip that $10,000 car for 15. But then you see that it can't get over 10, can't go to over 11. So you start to sell. When you go to sell it back to me, I go, oh, I'm sorry, my friend, I can't buy it back for 10, I can give you 9. And then you hesitate. And then by the time you say, okay, I'll take 9 for it, I'll go, oh, I'm sorry, buddy. I bought everything at 9, now I can pay you 7 for it. Then you go, oh, Jesus, okay, I'll sell it to you at 7, but you hesitate. Then I go, well, I can buy it back at 6. So that's the concept, okay? So then I buy it back from you at 6. I sold it to you at 10, right? And then I'll keep buying down to maybe 3 or 4. I bought the cars for 2, which is my cost basis, right? That's what I was trying to show you guys on this chart here. The cost basis from yesterday is here. This was the distribution, and we sold it right back to the top of that cost basis. Does that make sense to you? Cost basis is how much you paid for your goods. In this case, your goods are ES contracts. Right? So there is profit taking, and then there's sellers who compete. and you come down. Now when you get severe competition, you're going to come back into cost basis. And we're going to come and test that 71.50 now. Here we go. Inventory and cost basis. Yeah. It's not time, it's the place. So in this case, I'm looking for inventory is truly corrected according to the market profile people when we come back and tag the close of the previous session. So it's not so much time as a place. Now that's a market profile concept. Now sometimes it's not always going to get down to yesterday's close. It could bid and pop back up. You know what I mean? But the theory behind it that I was taught is that that inventory is corrected. Say, if we're long, if it comes back down to the previous day's close. If we're short, goes right back up to the previous day's close. Does that make sense? Now the concentration of yesterday's inventory is here at 71.60. So that's why it's do you see how it's kind of slowing down? Because this is how much they paid for it. They went and put it up, sold it all night at higher prices, right? Think of it like this, right? Say you're selling donuts, right? Donuts or hot dogs or whatever, right? And this is what you have at the end of the day, right? You take those hot dogs and you go to the nightclub and you wait for drunk people to come out and you can sell them for twice what you paid for them. And then you put them back on sale and you come back down to cost basis, right? So if you're shorting now, your stop it'll be 77 and you're looking for 53, okay? And this is inventory correcting. See how we stopped right at the point of control? That's where 70% of yesterday's inventory is priced. So they just stop selling. When the market stops selling, the buyers are forced to pay more. That's why you get that green candle. That's always good, LC. Cover before that B open, which is in what, a minute? Yeah. Ooh. Yeah, and the chart is just a sales chart, right, Hex? So it's risk, hot dogs, donuts, spices. This is just a chart telling us how sales are going. How is the distribution of this? That's all it really is. But it's just a sales chart. So we've stopped selling at 59, 60, found a bit, came up. Now I'm looking to see if this is a look below and fail of 66. But we can clearly see that there is a seller stepped in here, right? Hey Mike, how you doing? So we got a seller here at 68. So if you're looking for longs in a sort of counter rotation, I'd wait till we clear 68. Give it some time. Whoa, hello, bid. Get back up over 68 and you're long. Get your seller who's ready. Watch your offer. Take profits, my friends. Take profits. Right? Long a little at 68 and 3/4. Selling the 70s. You want them, you can have them. And I'm flat. Couple of points here, couple of points there. 3 to 5 contracts. Good enough for me. Right? I don't need to have a stroke. Low stress trades. Right? Low stress. Low stress. Those who are still long, you're looking for offers at 73 and a half. 73 half, 3/4. This is the look below and fail of 71.66. Yeah, and that's good, Elsie. It's good you said that because a lot of times we do take trades to get stopped out, and that kind of repositions us or kind of realigns us, gives us good information for the next trade. You know. Thanks for sharing that. There's that 74. And if you're still long, your next stop is going to be up here at around 76 and 3/4, 76 and a half. So you can see those trades are quite nice, right? You get the this long here. This is a better long because it sells underneath and comes back up. So what we do is we take the trades when it goes into one color and comes back up into the next one. Or if it fails to get in here, you can go long here, put your stop here, and sell into strength. But you always want to sell into strength in these kinds of markets. Do yourself a favor, take profits. If you have a larger account, or if you're trading CFDs, use the levels. Right? Learning how to manage positions and manage trades is difficult. It just takes time. Get consistency scalping, and once you get some consistency scalping, and what I teach people is to scalp. Why do I teach people to scalp? Why do I teach them to trade quick? Because I want them to develop their speed and their skill. Once you develop your skill, what that does, it's not that I want you taking 200 trades a day, it's I want you to be able to get out of bad trades quickly without overthinking, without freaking out. And the way to do that is to scalp. Yeah, exactly, Elsie. You'll make profits over time. Is there news? I don't even, the only thing I do with news is I make sure I know when it is. So I try not to be in a position when there is news popping off. I'll wait till the news sort of passes and then trade afterward. It's kind of my thing. Oh, is that 10 o'clock? Yeah. And what do we got tonight? We got crab apple, right? After the close? We got crab apple earnings. Hey, nice work. Took your second payout. Well done, Mike. Well done. That's what I love to see. It's nice to see your friends get paid. Okay. Now we're in a bit of a chop fest here. See if we can go 74 to 76. Here we go. Give the old college try. Ooh, aggressive seller at 74, my friends. Aggressive seller at 74. Seen that a couple of times this week. We saw it, was it yesterday or 2 days ago? Saw a fairly aggressive seller. You know, month end, Attila, and the last trading day of the month, there are a lot of traders that'll be offside or trying to accomplish an agenda, and they will take no prisoners when they're doing it, right? This market's actually been pretty sort of PG-13 lately. There hasn't been a lot of crazy volatility in a long time. There's been big ranges and things like that, but the price action has been fairly tradable over the last couple of months. Sometimes it's a little fast, but it hasn't been, it hasn't been like, when they first started going algo, pure algo, in, the president's first term, those algos were like, they had no breaks. You get the price was jumping around 6, 8 points. It was really, really difficult to trade. Algos are definitely taking a smoke break. You guys have questions? I'm still waiting for a move down to tag the close. And we still haven't gone and tickled that 71.50 yet. So folks on YouTube, little ad for the room again. We are still got the 3-day special where you can come into the room, give it a shot. You don't have to pay anything for 3 days. See how you like it. And when you come into the room, DM me, have a chat. I should be back to completely normal health next week. But give us a shot for 3 days, see how you like it. And I promise we'll try and teach you as much as we can and help you get consistently profitable. So if you're tired of blowing up accounts, if you're tired of not passing evaluations, give us a shot. And even if you try it out for a month, it's only going to cost you 19 American dollars, which is nothing. It's less than a trip to McDonald's. Thanks, Dave. Yeah, and when I'm not in there, we have a lot of people who are willing to help. Is that seller at 68 again? What I'd like to see is that point of control come and move down. Otherwise, we're just going to get like a chop between here and here and just back and forth like this. Once that position is cleaned up, we're going to take it up and try and sell it over here. So say you're a larger trader and you want to go position long, right? You build a long position here, maybe between 66 and 68. Maybe get some cheap stuff in the 64s. If this area holds over the next half hour, we'll take this and it'll go back and they'll try and distribute it up over here. You guys get that? Make sense? Back and forth. Good time to go get a coffee. Good time to go get a coffee. Any questions? You guys want to look at anything? We're going to have Apple earnings tonight, I think. So there's, we're looking for acceptance over 273. No, yes. How do you come up with a cost base in inventory and double it 2 times? What's the genesis of that? Okay, David, so let's go with an example. Good question. So, David, you are going to the market and you're going to sell, let's say, shoes, right? And you buy 100 pairs of shoes, and how much do you pay per pair of shoes? So you say you maybe pay $10 a pair, right? On 100 pairs of shoes. You with me? So then if you double your money, right, you have a cost basis and you sell it for 2 times, and that's profit. You get it? Does that make sense? See, everything's very simple and practical, right? You 2 times, 4 times, 8 times, 16 times. Simple, right? It's like what I like to call hillbilly math, right? Nice and simple. So when you look at a chart, David, right, what this does is it gives you an awareness of where pricing is. So if your cost basis is at 71.46 to 53, right? Should you be buying it here at almost 8 times cost basis? Is it smart to buy something up here when it's that much overpriced to try and look for that? Or is it better to wait until the market comes close to where they bought it and you get a better deal? Does that see everything we do makes business sense, right? It's really simple. It keeps you aligned so you're not shorting like now this is a discount zone, right? So here's a cost basis. Do you want to be shorting down here? At 2 times discount? No. This is where you're looking to buy. That's why what this does is it keeps you in tune with the market. Most traders, number one, they don't know when to trade, when not to trade. Then they're always buying the top and shorting the bottom. This keeps you from doing it. It gives you situational awareness. Very simple. Very simple. Oh, they can underwrite more contracts, right? Good question, Randy. So unlike stocks, and there's no insiders. Yeah, there's no dilution, right? On a trend day, if I miss the move, David, I don't trade. I'll wait for a sell-off. And that's why you got to wait, right? I want you to think about it like a business person, right? That's why a lot of traders lose money because they chase the move, right? Instead of waiting for the discount. So this is where the smart money trades, and this is the dumb money chasing. Get it? All right, my friends, I'm going to leave you a little early here. Thanks everyone for being with me today. Have a wonderful trading day. We will see you tomorrow. Come join us at thetradingsyndicate.org. We'll teach you how to do this so you can actually make money, right? We'll teach you how to do this in a practical way. Thanks, everyone. Have a great morning, afternoon, wherever you are, and we'll see you tomorrow morning. Bye for now.